So right now, more often than not, when I'm talking to clients, I'm saying, hey, if there's a rate increase, even if I'm just talking casually to friends or family, and they're not insured, by me directly, if they're coming to me saying, hey, you know what, my insurance has gone up, I'm almost like, good, we need that, and then they just look at me like I'm crazy. I'm like, well, if they're going up, that means that your carrier is still in the game. Because what you don't want is to get this nice little letter that says you're being canceled or non-renewed
Yeah.
because your company has now exited the California market, right? Because if you actually look at it, and I can geek out on this all day long, but we have 12 major carriers in California that insure 80% of all homes. Okay, 8 of those 12 have completely exited the market. That's a serious
So
issue.
you've got 4 left.
4 left, and arguably those 4 are with the eligibility guidelines in terms of qualifications to insure very heavy restrictions. Now I say that with an asterisk because I don't represent those companies, but I can assume it because I know when I studied the industry
Yeah, yeah.
that it comes with heavy restrictions.
And what do you mean, like heavy restrictions? They won't cover
The,
areas that are like even
correct.
in
Yeah.
any kind of high risk.
A home that has an older roof, a home that's built before 1970, or that has outdated plumbing, like very heavy restrictions. Right.
Yeah.
So when you have 8 out of 12 that have completely left the state, that should set off all kinds of alarms.
I have a friend who called me and he's like, Gabber, like my insurance company sent me a letter saying that they want to check my plumbing. They want to check my roof.
To my point.
So what he had to do basically was get a home inspection on
Uh-huh.
his house, like hire a home inspector
Right.
to provide a report and then submit it to the insurance. Otherwise, they were going to cancel him. And last time I talked to him, he had submitted it all, but he didn't know if they were going to cancel him still.
Right.
So he's still kind of like
Right.
worried, like, hey, are they going to cut me off?
Right.
What do
And
you?
that is an ugly reality.
Yeah.
Right? That is a very ugly reality of Prop 103, right? So there's just unique laws and only unique to California, unlike any other state in the U.S.
Yeah.
There's unique laws to California that are built into Prop 103 that really, really handcuff insurance companies. At the end of the day, we're a business.
Right,
We're
yeah.
a for-profit business, and the consumer should want the insurance companies to make money because then we can keep our promise of being there in the event of a catastrophic event, right? A fire.
Yeah.
In here in Santa Cruz locally, our number one claim isn't fire, which everyone thinks is another common misconception, right?
Right,
Our
right.
number one claim is water damage.
Okay.
Does that make sense?
Yeah, but that wouldn't kind of fall in line with the current concerns, which are fire, right? I mean, we have
Right,
more
right.
fire concerns than anything.
Isn't ironically enough, if what I'm saying here in Santa Cruz, I'm speaking here hyper locally, right?
Right.
So if our number one claim is water, right? Water damage, right? A leaky pipe, things like that. The Fair Plan completely excludes that. That it's not a good policy for everyone to have.
So basically, the number one claim that's filed is excluded by Fair Plan.
Correct. It's excluded.
Oh,
Now,
okay,
then
okay.
that's when you start getting into the higher costs because then you have to get what is called a companion policy or a wrap policy to cover everything that the Fair Plan doesn't cover. Does that make sense?
Yeah. So you're basically having two policies.
2 policies to insure your one property. Where historically you should be able to go through a State Farm or an All-State of Farmers, right?
To get it all.
To get it all under one policy, right? But because of these unique laws that really restrict insurance companies here in California, and again, I'm a consumer also, right? So when I bought a home about 5 years ago, and it's the larger home in Santa Clarita, not larger, but average, right?
Right.
2,500, 3,000 square foot home, and I'm only spending $1,000 a year to insure it. From a consumer standpoint, winning, right?
Yeah, yeah.
But from a business model,
They're getting
that doesn't make sense.